All right, let's talk about Meta, because that's all anyone's going to be talking about tomorrow. I'd like to give you a preview.
Was a piece of bad news related to the amount of invest they're going to have to make on CapEx and energy to build AI. And he said, he used the words, I want to specifically call this out for investors to know that there is going to be a greater investment period before we realize the full potential of AI. This reminds me of things that Amazon has done in the past, just kind of reminding there are going to be periods of more investment. I read that as probably several quarters of this investment phase. They obviously just updated the CapEx guidance for the full year, but don't expect, I'm reading between the lines here, much of a lift or maybe a breakout in terms of AI. One more piece, Courtney, is beyond that bad news, to say he's bullish about AI and the potential on Meta is an understatement. He rattled off 5 different opportunities that they have within AI, and I just want to highlight one of them. He talked about Llama and building a big business at scale. I still believe they're going to build an AWS type of a business based on Llama in the next several years once they get to scale.
Down 18% now, and I didn't think this potentially could happen, but we're looking at levels, you know, the prior all-time high in the stock was made, I think, in August of 2021, around 385. That should be huge support. So I guess my question to you is, as Karen mentioned earlier, I mean, at some point, this is getting a little absurd in terms of the magnitude of the sell-off.
I thought if you'd have just given me the guidance and given me the commentary about that Zuckerberg talked about this investment phase and then the acceleration thereafter, I would have guessed the stock would have been down somewhere between 5 and 10%. And this is a standard deviation away from that. And I think it speaks to this underlying fear in tech investors that the party's going to end. The echoes of 2000, if they weren't investing then, they know all about those lessons learned, and people just don't want to be left in this, if it ends up being musical chairs. It's not going to be that. AI is real. It's going to, I think investors should rest assured, but this is a classic overreaction, just given, I think, a lot of, and it underscores the uneasiness that investors have about this AI opportunity.
On the surface here, at least for the most recent quarter, the numbers were in line to slightly above estimates. The guidance slightly in line to above estimates, but maybe some concerns here about how much they're going to have to spend going forward on those AI projects.
Yeah, that's a pretty good summary, Romain. Like, the first quarter was strong, and the stock is down 10.5%, pretty much only on the 2Q guide for revenue. Really high expectations for Meta because of all the hype around them with AI, but particularly on what they're guiding us on the second quarter revenue number, there's a 1% headwind from foreign currency, and I'm pretty sure that when you go on the call in about an hour's time, they'll use the words tough comps and talk about how the same period a year ago is difficult. But things are very elevated. You know, Zuckerberg's really talking up AI story, Meta AI, and also the latest model, Llama 3. I would also say that they're damned if they do, damned if they don't, right? The street has been really frustrated with Meta's spending, and then other corners of the market are saying, please spend more on AI. So look at the expenses number for the full year and look at the CapEx number for the full year. They're raising those because of the infrastructure spend on AI, but there's also some additional legal costs in there as well.
The stock's up 40% year to date, just 4 months into the year, and there was clearly the best feedback in all the advertising checks. So the expectation bar was higher than where they came in at 27% growth. I think the street was hoping somewhere for high 20s. And so this wasn't a wide miss. It was a narrow miss, but I think you chalk it up to stock had done very well. I think it was everyone's favorite, and everyone was positioned here. So you're probably seeing a little bit of a sell the news relative to the lack of a material upside on revenue. They're doing a great job controlling expenses. Their headcount was down 10% year over year. So I think, as Mark Zuckerberg says, they're growing responsibly and doing the right thing for the bottom line. So that looked fine. It just seems like everyone expected, via the checks, that advertising would be a little bit stronger. Again, I think this is more a game of inches than miles here, and it doesn't seem like there's anything to be super concerned about if you're an investor over the next year.